Hello viewers, welcome to KM Commerce World YouTube channel. In this video, we are going to discuss about the very important topic, issue of shares. So first of all, company can issue shares to the public in three ways. Three ways. Number one is at a par, number two is at a premium, number three is at a discount. So here the first way is at a par. What is mean by at par? So when a company shares issued at their face value, that means nominal value, is called as a issue at par. So for example, a company share face value is 10 rupees. In the same way, the company issue their shares to the public same price of face value is called as a issue at par. So the company share face value is 10 rupees. The company is also issuing the share at 10 rupees. So this is called as a issue share at par. Second method is shares issue at premium. Shares issue at premium. What is mean by shares issue at a premium? Shares are issued at a price higher than face value. In this case, the company can issue their shares higher than their face value. For example, the company face value of share is 10 rupees, but company is issuing their shares whether it is 12 rupees or 15 rupees. That means the company issuing higher than their face value of share. That is called as a premium. Shares issue at a premium. So here extra amount is called as a premium. In this case, actually the share face value is 10 rupees only, but the company is issuing their shares to the public whether it is 12 rupees or 15 rupees. That means higher than the face value. This is called as a shares issue at a premium. Extra amount is called what? Premium amount. Extra amount is called as a premium amount. So this premium amount should be transferred, that means should be credited to a separate account, that is called as a securities premium account. This extra amount than face value is called as a premium. This premium amount should transfer to a separate account, that is called as a securities premium account. The third method is issue shares at a discount. What is mean by issue shares at a discount? Shares are issued at a price lower than the face value. So a company issuing their shares to the public lower than their face value is called as a issue shares at a discount. For example, a company face value of share is 10 rupees, but the company issuing their shares to the public whether 8 rupees or whether 9 rupees, it is called as a shares issue at discount. So here company issuing their shares lower than the face value, that's why it is called as a issue at a discount. So this discount is treated as a capital loss. This discount is treated as a capital loss. So these are the three ways a company can issue their shares to the public. Number one is at par, number two is at a premium, number three is at a discount. At par means the same value. A company issuing shares to the public at their face value is called as a shares issue at par. In the second method, the company issuing shares to the public at higher than their face value, that is called as a premium amount. So this premium amount should transfer to securities premium account. In the third method, the company issuing shares to the public at lower than their face value, it is called as a shares issue at a discount. So this discount is a capital loss to the company. So these are the three ways of a shares issue by the company. Next, the first method is what? Shares issue at par. Shares issue at par. So here are the some important journal entries. So what are the important journal entries? Before going to that, I would conclude one thing. Actually, a salient feature of the capital of a company is that the amount of its shares can be gradually collected in easily installments spread over a period of time depending upon its growing financial requirements. That means a company can collect share amount from the public in a installment basis. That means a periodical installments collect from the public in a periodical installment. The first installment collected along with application. So this is known as a application money, and the second collected on the allotment, and remaining amount should collect as first call and second call and so a company can collect share amount in a installment basis. That means on application some amount, on allotment some amount, on first call some amount, on final call some amount. So like that, a company can collect their share amount at a different installments. So this is a very important feature of capital of a company. So now, what is the accounting treatment of shares issue at par? The first journal entry is when when money is received along with the application. Whenever the company want capital, the company issue some applications to the public. So along who want to invest, who want to purchase, they want to invest in the company. Those persons first apply through the application to the company. So when money is received along with the application, what is the journal entry here? Bank account debtor to share application account. Here through the bank cash is coming and share application account should be credited. And the second entry is when application money is transferred to share capital account. The second entry is so the application money which company received, that application money should be transferred to share capital account. So the entry is share application account debtor to share capital account. Next, the third entry is when any applications are rejected and the application money is refunded. In some cases, some applications are rejected, and that money came through the applications should be returned or refunded to the shareholders, applicants. So in that case, the entry is share application account debtor to bank account. Share application account debtor to bank account. Why? Because we are return their amount. That's why share application account debtor to bank account. And third, and fourth entry is when share application money is received in excess and the same is adjusted to allotment. In some cases, some shareholders pay excess of money along with application. In that case, the entry is share application account debtor to share allotment account. The money which is received through the application should adjust to the share allotment account. So for that, this entry will be passed. So share application account debtor to share allotment account. The fifth entry is when allotment money is due. When allotment money is due. In that case, the entry is share allotment account debtor to share capital account. We are calling the share allotment money here. So that's why share allotment account debtor to share capital account. And sixth entry is when the allotment money is received. So what is the entry here? bank account debtor to share allotment account. That is the entry when allotment money is received. So we are receiving the money through bank account. That's why we should debit the bank account. So that's why bank account debtor to allotment account. Next, seventh one. When when the first call when the first call made due from shareholders. So share first call account debtor to share capital account. Share first call account debtor to share capital account. That is the next entry. When the first call made due from shareholders, in that case, we should pass the entry like share first call account debtor to share capital account. Next entry is what? When first call money is received. In that case, bank account debtor to share first call account. So we received first call money. That's why we should debit the bank account. So the entry is bank account debtor to share first call account. And the next entry, when the second call made due from shareholders. So like the first call entries, we should also record for second call. So when the second call made due from shareholders, what is the entry? Share second call account debtor to share capital account. Like the first call entry. Next, when the second call money received, so what is the entry? Bank account debtor to share second call account. Bank account debtor to share second call account. Second call or second and final call also. Next, when call money is received in advance. So this is very important. When call money is received in advance. In some cases, some shareholders pay their calls money on the time of allotment. In that case, we should pass a entry. That entry is bank account debtor to calls in advance account. Bank account debtor to calls in advance account. Next entry, when call money, first or second or final call, is in arrears or yet to be received. This is also very important entry. What is that entry? When call money is in arrears, some shareholders cannot pay their call money. In that case, some arrears will be raised. In that case, this entry will be passed. What is that entry? Calls in arrears account debtor to share call account. Calls in arrears account debtor to share call account, whether it is first call or second call or final call. So calls in arrears account debtor to share call account. These are the very important journal entries we have to pass at the time of shares issue at per. So here is the quick memory trick. That means issue at par. Issue at par means equal. That means what is the face value of share? We are issuing same face value to the public. That is called as a issue at par. Premium means extra amount, plus amount, higher amount than face value. That is premium. And the discount is lower than face value. That is called. This is the very memorable trick. This is about the topic issue of shares and accounting treatment of issue shares at par. Thank you. Thank you for watching my video.